knowledge digitalization as the future norm in investment management, optimizing the decision-making of angel investors, crowdfunders, private equity funds, and VCs. We wouldn't want to miss the VCs. We've got a great panel to come up and discuss it for you here today. I'd like to introduce first our moderator who's going to be commanding the panel. She is Khada Taima, the lead financial sector specialist from the World Bank Group. Are you going to come up and join us? Over 12 years with the ISC. She's done it all in the world of finance. Please come on up and join us. Thank you very much. Ladies and gentlemen, let's have a round of applause for Khada. Fantastic. All right, we've got a great panel coming up for you. First, somebody who's well known to the WBAF community. He's spoken at this event many times before. Then he flew out to Hong Kong, and he's spoken at events that I've hosted there, including one that's happening in a couple of weeks, the Hong Kong Blockchain Week. If anybody's interested in that, come and talk to me. I can get you a free pass. He doesn't need one because he's a superstar speaker at that event. He is Brad Bulent-Yassar, right, of the Blockchain Investors Consortium, the co-founder. Please come on up, Brad. We have also with us here today Israel Pons, the CEO and co-founding partner of Angels Net LatAm, coming all the way from Mexico. Hola, please come and join us on stage. And finally, we're really covering the world off here. We have a senior advisor for the Federation of Indian Chambers of Commerce and Industry, Dr. Nikhil Agarwal. Please come on up, Doctor. Khada, the stage is yours. Please take it away.
No? Great. Thank you so much. Thanks, Andrew. I was just saying that Andrew and I have been meeting in conferences all around the world for the past maybe 5 years, yet when he introduces me, he always says, 12 years of experience. I don't age. It's incredible. It's a pleasure to be here, and thank you for your participation. We have a great panel with us today. Let me just, the way we're going to proceed is I'll give a very brief introduction, and then I'll introduce our panelists. I'll open the discussion with a couple of questions, and hopefully you will have questions from you, the audience. We want it to be as engaging and participatory as possible. So as you're listening to us, please start thinking of your questions, and let's kick it off. So early stage investing is both, as you know, an art and a science. It requires a thorough evaluation of both the viability and future success of the business, as well as the personal characteristics of the person behind the business. Investing in startups, early stage, and venture capitalists is often about talent acquisitions and ensuring you're in the right industry. Early stage investing, as you all know, is not an easy task. Over the past 10 years, the average annual venture capital return, for example, has only been 8.1%, as compared to 5.7% for the S&P 500, which hardly justifies the increased risk associated with the venture capital. However, the top quartile generated an annual rate of return of 22.9%. Globally, only about 20 firms or so in the universe of venture capital firms generate about 95% of the industry's returns. They succeed because they have proprietary knowledge of the characteristics of winning companies. Overall, startup investing is risky business. Investors are faced with the challenge to predict success before hardly anything has been proven. This can often lead to intuition-based decision-making. However, the latest developments in artificial intelligence, advanced analytics, and the well of alternative data have the potential to transform the investment management and optimize the decision-making when investing in startups, scale-ups, and high-growth businesses. Today's panelists will share their experience in dealing with risk and uncertainty and the tools they use to overcome these challenges when making investment decisions. Let me introduce our esteemed panelists very quickly. To my left, Dr. Nikhil Agarwal is a senior advisor of the Federation for Indian Chambers of Commerce and Industry. Dr. Agarwal was involved in developing large-scale innovation projects such as the 300-acre cybersecurity industrial park and several rural innovation labs, incubation centers, and startup ecosystems. He was involved in the setting up of INR, a $1 billion startup fund, and we're curious to hear a little bit about that. Nikhil, he's also the founder of Entrepreneur Cafe, a global movement that has spread to 110 cities on 6 continents, connecting over 45,000 entrepreneurs. To his left is Israel Pons, CEO and co-founding partner of Angels Net LatAm, Mexico. Israel developed his academic and professional career during his 24 years in the UK, where he served 5 years as operations director for the largest leisure company in Europe. He became an entrepreneur and founded 4 companies in the UK. 3 of them were sold successfully. He became an angel investor and decided to move back to Mexico. And in Mexico, Israel became a director of international expansion for a digital financial inclusion model, FinTech. The same group developed a venture capital in which he served as director of strategic alliances and impact investment. Last but not least, at the far end of the panel is Brad Yassar, co-founder of Blockchain Investors Consortium, USA. Brad is an entrepreneur, investor, mentor, and advisor who has started and bootstrapped several companies from inception to maturity over the past 20 years. He's currently the co-founder and managing partner of Crowd Mentor, a strategic crowdfunding advisory firm focusing on ICOs, cryptocurrencies, blockchain, and token-powered organizations. So let's start off, and a question to all of the panelists. Maybe if you can give us a brief description of what your organization does and how you're involved in the whole landscape of digitalization for investments in equity, venture, and innovation.
Thank you very much for inviting us here. It's quite fascinating to sit in a place where you have representation from more than 3 or 4 continents. So the learning, of course, goes manifold. So I'll give you the work that we are doing in India. So for the last 1 year, I have been deeply involved in promotion of rural entrepreneurship among women. So the government of India has given us a pilot project where they have also given us some money to promote 100 women entrepreneurs at the grassroots level. And these grassroots level does not mean they are working for grassroots level, they are from grassroots level. So many of them have coming from small villages. And digitization as a concept definitely exists in urban side of it, but it's quite challenging when we say that how the digitization and e-payments and the investment part of it has to be developed and implemented at the village level. So I'll give you a little background about the policy that we have in India. Since 2011, we have a policy called the promotion of self-help groups. Self-help groups is a group which is formed by a bunch of women, which are 10 of them in a village or a community, and they are working to promote a particular small business. So in earlier times, $1,000 per person was given as a subsidy. But since 2011, the subsidy is now given to the self-help groups. And now, as we move along in 2019, what we are doing is we are implementing a policy where we, on a fly, every woman or every SHG in the country can have an access to a credit using a mobile phone. And we are implementing a full-fledged method where, like a CRISIL rating or a CIBIL rating, or we have different kind of ratings. So by using the credit methods, the women have access to this fund, which is managed by the government or the private agency, and they can ask for a loan. And depending on their availability and their repayments, they are able to repay back that loan. So we are doing the digitization from the top of the pyramid, taking it to the bottom of the pyramid, and it's not a small amount. We are assuming if we are able to do in just one state, it would be close to $500 million.
Very good, thank you.
Shall I go next?
Please.
Yeah, why not? Well, as you heard, I'm Israel Pons, and we are Angel's Nest. We operate in Latin America, but are based in Mexico. We've been declared by an organization supported by Inter-American Development Bank as the most active angel network in Latin America. We do about 1 investment per month, which for the Latin American environment is quite active. Not only that, but also we have 3 crowdfunding platforms. I'm talking about digitizing and how to get to more people. The crowdfunding platforms that we do, the no equity, the more to do with reward crowdfunding platforms and social impact. Very similar to what has been mentioned here. Obviously, in Mexico and Latin America, we also have our challenges, especially with the bottom of the pyramid. But using the digital tools that we have, being an angel network, as most of you would know if you're involved in an angel network, there is no such a thing as a business model that's sufficient by itself so that you can survive and make money out of, because you're actually investing all the time. So you've got to wait for the time to come by. So you have to create other models that they're not labor intensive on utilizing part of the team in your angel network, but more on digital tools. And the purpose of that is that you can filter projects a lot quicker, and especially looking at different tendencies as to what's happening for us in Latin America, what's happening with the trends around the world, and then what is happening between the different angel networks in Latin America in order to do some cross-border angel investment. So as you can see, as an angel network, we're quite diversified. We also have a real estate crowdfunding platform, and that's more to do with prop tech. That's in order to use the technology as part of a natural and traditional industry like it is real estate, but also creating a tool that allows the angel investors to invest there, and therefore having a more diversified portfolio between social impact projects, 2 or 3 crowdfunding platforms with different verticals, and then the hard portfolio where they actually take part into.
Hello, everyone. My name is Brad Yassar, and I have 2 organizations that I represent here. Number 1 is, of course, Blockchain Investors Consortium, and it's a consortium of active investors in the blockchain space. What BIC does is it aggregates deal flow and provides due diligence for its investor members. Obviously, the second business is more in line with this topic, which is Beyond Enterprises. We rebranded CrowdMentor last year to Beyond. With Beyond Enterprises, we provide strategic advice on how to incorporate and implement blockchain technologies into your business. And that actually speeds up the digitization process, because in my lifetime, investments and securities went from a paper format to digital format. Now, within that transition, the overall structure didn't change. It was still a third-party trust-based structure. What we're doing is bringing it into the 21st century and creating a trustless model where you don't need banks or escrow agencies or things like that. So we have a couple interesting projects on further digitization of information and investments.
Thanks, Brad. And since you were just talking, maybe you can also tell us a little bit from your experience about the challenges and opportunities of leveraging technology and digitalization in the investment decision-making process?
Absolutely. So I'll start with challenges. The biggest challenge most technologies in regulated spaces face is regulation. A lot of the times you see laws and regulations that govern certain industries that don't get modernized with times. And so when new technology is introduced, there are challenges. I can give a simple example, digital signatures. I think the number was around 60%. Today, 60% of governments and financial institutions don't recognize digital signatures as real signatures, whereas we have the technology in place to digitally sign documents. So there is the challenge, and it doesn't stem from technological complexity or user experience. It's more regulation. because there's no regulation, or the regulation says you need to have a wet signature, the technologies face a bottleneck. The opportunities are, again, when you have documents and when you make investments and you need to track those things, there's a lot of archiving that needs to happen. So you can have a good custody of exchanges and ownership and things like that. And with digitization of information, we're seeing some very exciting things happen in land titles, in property exchanges, and even money exchanges. If we look at what's happening in the blockchain space right now, you can transfer any amount of money instantly, near instantly, to anyone in the world, which some of you may not know about this. But if you were to use the most prevalent banking system that's used to transfer money, which is SWIFT, there is a 24-hour minimum right now for that money to go from your account to the destination account. Whereas with further digitization and a trustless model, you can have the same transfer happen with much smaller fees in minutes instead of a day. So those are two examples, one where the challenge is at, one where opportunities lies, but the use cases are infinite right now.
Great. So other than regulation as a challenge and efficiency or speed, Israel, what are some of the challenges, one or two challenge from your perspective, and opportunities as well for you using digitalization in investment decision making?
I think one of the biggest challenges for angel investors is to be able to digest all the information that is out there with different industries that are on a trend. So, for example, in Latin America, specifically in Mexico, in the past 3 years, there has been, well, last year, there has been the fintech law passed, which is great because it means that you have crowdfunding platforms that are able to do equity, you have crypto currencies that are being sort of regulated, or your rights are being protected. But what does that mean to the angel investors? We all talk about these trends and these technologies, and we talk about cybersecurity, but in reality, for an angel investor, where do you get that information from? What trend do you think you should be putting some of your money in? And who should you be co-investing with? So digitizing a pool of information that is relevant to the portfolio of an angel investor is one of the largest challenges that any angel network will have with them. Because normally an angel network would specialize in certain industry, 2 or 3 industries, because the founding members come from certain industries. So when a new trend, like and trend because it starts to happen, whether it's going to be successful or not, you don't know yet, like fintech, like crypto, like cybersecurity, like IoT, like all of these new terms, they're just as foreign-based to your daily language as investors as it is listening to the entrepreneurs talking about these new terms. So basically, one of the things we have done is digitalize all this information that is out there, filter it, and then present it to our angel investors who not necessarily, as in other markets, mature markets, are necessarily gray hair like I am, but there are new angel investors in the emerging economies that are younger in age as well. But you have to present them all these new trend industries where they need the information quickly and being able to digest it, to be able to take then a decision, or to then go and see a startup and say, I know what exactly they're talking about. Now I can take a more studied decision as to whether or not I would like to invest here. So digitizing information, digitizing trends with valid data is what angel networks, in our case, we see it as a big differentiator with other angel clubs.
So the power of analytics, basically.
Exactly.
Very good. Nikhil?
So you ask a question about opportunity and challenges for digitization. So I'll tell you in the context of India. Since we are a very large economy, close to 1,300 million people, so it opens a different kind of opportunities and challenges for the people. Challenges-wise, digitization also involves like everybody need to be educated, everybody need to have an access to a mobile phone or a method of transferring a payment or accepting a payment. You need a basic education. Still, the places where the literacy rate is not 100% could be a challenge. Places like India or Africa. Another challenge and also an opportunity about inclusion. So certain vulnerable groups where could be very large groups, old age people, people not educated, people in villages or urban poor, they don't have, they are not included as a part of digitization exercise. The opportunities that I have seen in the last few years, we have a huge drive of Digital India. The Prime Minister himself has kicked up that drive of creating a digital assets, digitization of the currency, and pushing for digital payments is the reduced corruption. So in the current government, the last 5 years, there are approximately, in terms of million, I would say 100 million new bank accounts have been opened. So that includes the financial inclusion part. So subsidy which is given by the government to the poor people. Earlier there was many layers of corruption which was involved. For example, there is a subsidy for on PDS, public distribution system. So everywhere there was a corruption involved, there were middlemen. Now the subsidy directly goes to your bank and the person can withdraw that money directly from the bank rather than going through the level of middlemen. So that's something which we have seen. One of the biggest challenge which I have seen in a country like India is the acceptability of digital currency. But it requires a huge amount of infrastructure which is not yet ready. So one of course, until there is a challenge, there won't be an opportunity for startups and angel investment. So one of the biggest challenges / opportunity is that half of the world population does not have access to internet. So if we are able to provide a solution, which could be a big area of investment, is we are able to provide a method where the people who does not have access to internet, there are examples exist in Kenya like M-Pesa, which we can do something like this for the larger group. I think there is a fantastic opportunity for investments to be.
Great. So inclusion is a big plus, of course, bringing those who are underserved or unserved under the radar to the formal sector through using digital financial services.
Yeah, and the one, as I have said, mentioned that the real challenge is about the adaptability of these digital instruments, because that require a basic infrastructure. You need a mobile phone, you need access to internet. So access to internet costs you, let's say, $10 a month. But how do you afford that? You are living in a village where the services are not proper. So will you accept that digital payment? And you don't have a bank account, or a bank is like 20 kilometers away from your village. So how do you do that? So it's about the infrastructure which exists. So sometime as an entrepreneur or as an investor, we feel that everybody can use digital payment so easy. But we have to start thinking from the other way around, from the perspective of the users who's actually using it. And if we do that, then there are opportunity for creating new solutions, new startups, and new investments.
Great. So my next question is to both Brad and Israel, since you're both entrepreneurs yourselves and angel investors yourself. How is the decision-making process different from, 10 years ago, for example? In the decisions that you're making right now, what is different? How are you evaluating those investments? What are you seeing different?
Well, I think the availability of data is different. 10 years ago, you had to do a lot more research to understand the industry standards and get the right parameters to look at a deal. Is this a good project? Are the numbers they're projecting in line with industry standards? Because not as much information had been digitized and available almost freely on the internet. Fast forward 10 years, now we have tools, both automated and manual analytical tools, where we can look at deals, we can look at the industry, and have a really good grasp of where the numbers need to be. I'm a big data person, so I really like tangible numbers where you can look at them and you can gauge what the founding team is projecting before making an investment. So that's number one. Number two things, because of digitization of a lot of information, the process of reviewing projects has sped up. So instead of receiving a lot of information on paper, reviewing it, I mean, I recall the days where I'd get a 150-page PPM and have to have an attorney read it, review it, then I would read it, and an industry analyst. And it was an arduous process because the information was printed. Now, no one sends PPMs anymore. You get a 10-page pitch deck, all the key elements are there. You can compare it against industry averages. The process has been much more quicker, allowing us to look at many more deals and with many more data points. So those are the two things where there has been significant changes. And finally, verification of information. Because a lot of data has been digitized, and I'm talking about diplomas, certificates, any claim someone makes to receive an investment, it's much easier to verify than 10 years ago. Again, 10 years ago, you picked up the phone, you called Harvard's admissions office, said, hey, did this person really go to school there? Now you don't have to. You can do it online because the information is there. And those little things really compress the investment process, at least for me, from maybe 6 months to a month and a half, which is really good for entrepreneurs. It's good for investors because you get to the right decisions, hopefully the right decisions, but you get to a decision point quicker.
Very good. Israel?
Yeah, I felt when you said the 10 years ago, I felt like that social media challenge, the 10-year picture, 10 years ago being an angel investor and 10 years later being an angel investor. And I think it's exactly that. If you look at the picture you took 10 years ago with an old, not very good camera, and you look at your picture now, after you apply the Photoshop editing, you look a lot younger and you are better looking than before. And I think that is,
Speak for yourself, please.
that, in a sense, is what angel investment digitalizing has made you be now. You should be a better angel investor now because you have the data available. You should be a better angel investor now because you can do a due diligence quicker and give an answer quicker to the startup or the scale-up to be able to grow quicker. But one of the challenges you had before is normally, yes, and they mentioned it in the panel earlier on that was here, or the table that was discussing this, is one of the questions is, and I think it was Peter Cowley who answered, I like to see the entrepreneur physically. And I will say that is all very well and fine, but now with the new tools, you're starting to see that angel investors, we're starting to do cross-border investment. And in order to be able to do cross-border investment, you need to digitalize, not just the pitch, not just being able to see the entrepreneur pitching to you through Skype or any other tool or through Zoom or whichever it is, but the information come to you. And also, you're going to start doing, like we are now, doing co-investments with somebody that you haven't actually met physically. Not just that you haven't met physically or in person the entrepreneur, you're actually co-investing with another angel investor. Not because you're absolutely going for it and said, oh, yeah, that's an angel investor, and because they say they are an angel investor, I'm going to co-invest with them. But actually because they belong to organizations like this, WBAF, IBAN, Scala in Latin America, ACA in the US, NACO in Canada. So that makes you have certain standards that they share with you. So now through webinars, through other tools that you find digitalized, you get to meet other angel investors. And you actually say, you know what, we're going to invest $50,000 and it's 5 of us. It's actually about $10,000. If everything else is tick the box, and you actually can, the same way that you look at an entrepreneur and you say, okay, I can now go and check whether or not you went to a certain university or you did something. You can also check that, check out the angel that you're co-investing with and say, this person has the knowledge that I don't have in certain industry. So what does that happen now? Well, with co-investment cross-border, for the first time, angel investors can actually start investing larger tickets into startups. So we can go one-to-one with certain VCs that come into early stage investment area of startups.
Great, and maybe just to pick up on the cross-border aspect of it, you talked about the opportunity there. Surely there comes some challenges as well with cross-border investments, even with the whole digitalization that's happening right now. Can you tell us a little bit about that as well?
Sure, so it's a good thing you asked that because obviously you're looking for the cross-border angel investment and you think that everything is going to be fine and we're sharing documents, etc. So we had a case a year and a half ago where we had a startup that was based in Mexico and was going to start operations in Colombia, Chile, and Argentina. And we had angel investors from those countries as well. And we felt very proud of ourselves leading the deal and sharing the documents with everybody. And oh my God, it was a real pain. We never knew how much we were going to learn. Actually, we never knew how much we didn't know about cross-border angel investment. Obviously, the fact that you can actually digitalize a deal and do a co-investment, it doesn't mean that all the countries have the same laws. So what a deal that normally would have taken us 6 weeks end up taking us 6 months to close it. Yes, admittedly, it was the largest first angel round in Latin America. Back then, it was 1.2 million USD, which for those of you that might want to know some of the numbers, the average deal in the US outside the Silicon Valley is, for an angel investor, is $15,000. For a startup, is normally around $250,000 to $300,000. That's still the average, even in a place like the US. So for us to be able to do a 1.2 million USD, it was real. It was a real winner, but it was actually very painful. And it just proves that digitalizing doesn't mean that you actually can jump hoops over the legal stuff and the due diligence, because each country and each angel investor or organization, in this case we co-invested with Wira, had a different thesis, and we had to apply all the deals that we had to do legally. But yeah, remembering that right now, that it just aged me 10 years.
So, Nikhil, tell us a little bit about that $1 billion fund that you had in India specifically for startups. I mean, of course, India is a big country with a large population, but how do you ensure that you can indeed invest? What is the ecosystem that needs to be in place to support such an investment fund?
So from the government side, I was involved. So this particular thing is not somebody private, but it's from the government side, I was involved in writing some of the initial innovation policies in the country. And we wrote the policy for state of Andhra Pradesh in 2014, which has inspired more than 17 states to draw their policy. And the government of India has also mentioned about the startup fund. So the fund which you mentioned is different. I'll come to that. So government of India has around $2 billion startup fund, which is now given to an organization called SIDBI, Small Industrial Development Bank of India, where it's a fund of funds. So the individual funds can request money from them, and then the fund is given to them. And top of it, so that's a central fund. Then in top of it, we have around 17 states which have written innovation policy, and they have announced their own funds, which range from anything between $50 million to $200 million. And these funds are also available as a fund of funds, which is focusing towards promoting startups from their state, or the startups which are coming from other states, but the condition is that they have to start operating in particular state. So if you look at from just the government fund which is available to the startups, I would estimate, I have not calculated, but I will estimate anything between $3 billion to $4 billion is available as a startup fund. But I'll tell you the real challenge, and you will appreciate the fact, is all government fund. It does not go out. So it looks very exciting when the government announces a fund, not a photo op, and I'm saying on record, but disbursement is a huge issue. But $4 billion available in a sovereign fund is not a joke. And if you start calculating as a leverage, which is 1:5 leverage, we are talking about almost $20 billion as a funds of funds available. And it's not a joke even for a big company like United States. But it is all locked up. It is unfortunately, the policies are not so robust enough to disperse that fund. So that challenge we face every day. I think it's a very important lesson for developing countries such as India or other countries like Turkey or Mexico to look at those examples, that it is nice to announce a support for a startup, but startup choke when it comes to the funding part. Unfortunately, the government is not able to decipher that code, that how to provide the sovereign funding opportunities for the startup. Eventually, they go to find $10,000, $15,000, and sometimes that's not enough, the kind of solution and the kind of requirements that we are looking at.
Great. And my last question before I open up to the audience for remarks or questions to the panelists is to Brad. Maybe Brad, you can tell us a little bit about the impact of crypto assets and distributed ledger technologies or blockchain in knowledge digitalization.
Yeah, I mean, I think it's a twofold impact. So with crypto assets, whether it's traditional securities being tokenized, so put on blockchain, or brand new tokens created that are not backed by anything, it has two impacts. It creates really quick liquidity for investors, because traditional systems, especially traditional private equity systems, have this built-in waiting period that's 5 to 15 years where you make an investment as an angel. Unless there's a quick liquidity event, the company gets acquired or they get to a size where they can do IPO, there's no exit. I mean, there's no easy way to say, hey, maybe I put $100,000, now my investment is worth $1 million, I want to take out my $100,000. Before blockchain and distributed ledgers, that wasn't possible. It was very arduous. You had to find an accredited investor who agreed to do a private deal with you, transfer the shares. With tokenization of those securities, now there's a lot of secondary markets that are popping up where you can invest in a startup, and if things are going bad, you can get out. You can take a loss in 6 months' time and unlock those funds, well, whatever's left of it. Or in the best case scenario, if the company is doing really well, you can say, hey, I'm going to sell a portion of my private investment and not have to find a counterparty. So that's the biggest advantage in excitement on the investor side of things. If you find a good project and they're successful, the liquidity comes a lot faster. On the entrepreneur side, it democratizes investments because since 2016, whenever I talk to entrepreneurs outside of Silicon Valley, outside of United States, everyone is ecstatic about now being able to access capital in similar levels to Silicon Valley companies. And that's in Ukraine, that's in Russia, that's in Turkey, that's everywhere in the world. As long as you have an internet connection and you have the technical know-how, you can create a new investment vehicle and get the funds you need to build the technology or the company you want without having to relocate to England or relocate to California. And I think that's a huge catalyst for quicker iteration of startup ideas. Because things happen so fast because you have quick liquidity on the investor side and you have relatively easier access to capital on the founder side. The good projects get the funding or a portion of it that they need much quicker than a couple years ago. And then they need to really deliver on their promises because the reaction is equally quick. If your investors are seeing that you're not doing the right things, you're not getting the market share, you're not building a product, they can sell their shares and they're out. So the days of when we had the internet revolution, you invested in a company, they said we're building stuff, so there was a 2-year building period where as an angel investor, you didn't ask questions. You just waited. Okay, they're building. I'm not sure what they're building, but they're building something. So there are delays in the feedback loop that created the big internet bubble, and then it burst because a lot of people were not building what they're supposed to, and it created the bubble, and then there was a lot of loss. Now the cycles are so much quicker with blockchain and crypto assets and just digitization of information, a lot of information, that feedback loop is tiny. It will never get to a size of $10 trillion of a bubble that suddenly bursts. Now we see small corrections because projects come, they raise money, they deliver great. They don't deliver, people get out of them. So for me, it's an exciting time to be an angel investor because now you will still have your long positions with equity in the deals because those are still going to be tied to liquidity events. But if the company is using blockchain and if they're able to offer you digital assets, tokens, coins, whatever they want to call it, then you have this quicker liquidity milestone that's reached, and it helps. It helps get course correction for your portfolio.
Great and very interesting. Of course, we can go on much longer. I have more questions for the panel, but I want to leave some time for you, the audience, to ask questions. So if you have any questions, can you please raise your hand? And there's a microphone that there's a question right there. Can you please introduce yourself and ask your question?
Okay, thank you for the presentation. My name is Nikolai Sterev, and I'm professor of Economic University in Sofia. And there are a lot of interesting words. Three of them I should mark. The first one is about networking. The second one is about the trust. And the third one is about the information. But the main idea of startups is that they jump over the limits like a rocket. You tell a lot of things about the opportunities, the challenges, how to finance the startups, and how to find a proper business angel for financing. But what do you think about the digital limits of such model? is there limits, digital limits about business angels and how they're financing startups? Thank you.
Okay.
Perhaps if I understood your question right, is we've been talking about digitalizing, and I said, what is the limit with it? And you mentioned something very, very important, which is a network. The digitalization is not gonna change the way, as angel investors, we still have the power of the network. It is not a replacement of. And I think something that the panel has agreed that is the speed to which you can take decisions better informed and also being able to invest. What's not going to be taken away is the mentorship that the angel investor must give to the entrepreneur, is the fact that also, just to reward it, we cannot take away our human faults through digitalizing it. Basically, the first thing that you have to measure is the ego of the entrepreneur and the ego of the angel investors. So we know that both of them have an ego because they're both human beings, so that's one of the main things that we have to work on. You have to work on mentorship, and you have to work on opening your network as angel investor. I think those are the three things that we still have to do. Yes, maybe through a digital platform to communicate, but that we still have to do it. I wouldn't invest on an entrepreneur if there isn't at least two angel investors working hand in hand with that entrepreneur. I can be an angel investor from afar, and I will talk to the other angel investors that are working with the entrepreneur. I will also, be able to make a decision based on how do I get on with the people. The chemistry between us as human beings, I don't see it as being replaced as yet. Without it as yet, there is a danger of that, but I don't see it being replaced as yet on the angel investment side of things, because we have always said, at least this is what I think, and each angel investor has a right to think whichever way. Angel investment, to me, is about people and human values and not about money. So yes, it is about technology, but it's just a tool for the industry that you're going to be involved in. At the end of the day, I got to fall in love with you if you are an entrepreneur to be able to invest not just my money, but my time and my effort, and to mentor you to be able to be successful together with me, of course.
To elaborate on that, I think the limit is mostly bandwidth and time on both sides. You can digitize information, you can analyze it in an automated fashion. Of course, it allows investors to look at more deals to a certain extent, but at the end of the day, we all have our limits. And a good investor that wants to be a smart investor, not hands-on, but a helping investor to the project, has always have to take into consideration their bandwidth, because you can't be an active investor in 20 deals. You can have 20 deals in your portfolio, you can have 50, but some of them have to be mature that don't need your attention, because if you divide your attention 20 ways, you're not going to help anyone else. So even with digitization, the time and bandwidth is going to be your limit.
Sorry, and a quick comment there is, and that's just for the startups, as Brad said, but actually you still, as angel investor, in my case, I still have to be a dad to 5 girls. I still have to be a husband. I still like to have a hobby as well as being an angel investor.
So human limits, actually, more than digital limits, human limits. Any other questions? I'm wary of time, but I'm happy to take one more question if somebody has a burning one. No? Okay, well, to conclude then, in tweet form, since we're talking about digitalization, maybe each one can give me a hashtag, 150 characters or 140 characters, Something a message to leave the audience with. Brad, we'll start with you.
My message is if you are interested in investing in blockchain startups, we're doing a workshop just in 30 minutes, so happy to host you there, and you can see how the thought process is on our side that goes into making a decision.
I will repeat something that I just said now that I really believe in is angel investment is about people and people's values and not about money.
That's a good hashtag.
So my hashtag is inclusion, dash, digitization, here we come, but don't leave me behind.
Very good. Excellent. An excellent way to wrap up. Please join me in thanking the panelists, Nikhil, Israel, and Brad. Thank you very much.
All right, and thank you also to our evergreen, perpetually young moderator who's done an absolutely brilliant job. Chada, thank you so much for commanding this panel.